It's the 26th day in the month of September 2023. And because it's 10 a.m., it's time to do 55 minutes of current and relevant business conversations. And you only get it right here at Business Morning on Channels Television. I'm Emi John Mekwa. We get right into it now, and we tell you what's going on in the global oil space. That prices fell on Tuesday amid concerns that fuel demand will be crimped by major central banks holding interest rates higher for longer, even with supply expected to be tight. Brent crude futures were down 38 cents to $92.91 a barrel, while U.S. West Texas Intermediate crude futures were trading 34 cents lower at $89.34. The world's top economic policymakers, the United States Federal Reserve and the European Central Bank, have over recent days reiterated their commitment to fight inflation, signaling tight policy may persist longer than previously anticipated. Higher interest rates slow economic growth, which curbs oil demand. Separately, on Monday, rating agency Moody's said that a U.S. government shutdown will harm the country's credit, a warning coming 1 month after Fitch downgraded the U.S. by 1 notch on the back of debt ceiling crisis. China's property woes have also weighed on sentiment, according to CMC, with China's Evergrande's announcement on Monday evening that it had missed a bond coupon payment, driving renewed investor pessimism on the sector. While supply remains tight as Russia and Saudi Arabia have extended production cuts to the end of the year, Moscow eased its temporary ban on gasoline and diesel exports, issued separately to stabilize domestic markets. And then we come to Nigeria. It's countdown to 1st of October, when Nigeria will officially turn 63 as an independent country, 63 years of its existence as an independent nation, and that will be in just about a week. Against this backdrop, Channels Television, in its usual tradition, kickstarts a series of reports to highlight President Bola Tinubu's 8-point agenda to optimize Nigeria's potentials. Well, this report I put together on the 8-point agenda, but focusing on just 2 of them: economic growth and access to capital.
Bola Ahmed Tinubu.
On May 29, 2023, President Bola Tinubu took his oath of office. With this, he inherited an economy with debt servicing to revenue ratio of 96.3% in 2022, inflation spiraling at 22.22% for April 2023, and a GDP that had slowed to 2.31% for the first quarter of the year. President Bola Tinubu has been intentional in setting his administration's agenda, taking into consideration Nigeria's priority needs. 2 of the 8-point agenda, economic growth and access to capital, captured the factors militating the growth of the gross domestic product, which the National Bureau of Statistics had placed at 2.53% for the second quarter of 2023. Purchasing Managers Index has remained negative at 47.6% for August. Status of micro, small and medium enterprises, which according to the 2021 MSME survey by Smidan comprises 96.7% of all businesses in the country. It cannot be adjourned perfect. Central Bank, through its Monetary Policy Committee, has been determined to curb inflation.
The option to continue to hike the policy rate a bit moderately also presented a strong alternative.
In December 2022, the headline inflation rate was at 21.34% before rising to 25.8% in August 2023. Meanwhile, interest rates had been hiked from 11.5% in March 2022 to 18.5% in May 2022, and then 18.75% as of September 2023. The over 39 million MSMEs, creating over 46% of the GDP, feel the impact the most.
We realize that most of our banking institutions are not ready to give a loan to this subsector in 1-digit interest. And that is why it is not comfortable to a lot of them. A lot of them have been coming to Smidan that can Smidan do advocacy to the federal government in terms of the interest rate that central bank is charging through the commercial bank for the loan that they want to borrow to inject into their business.
The path of a single interest rate is the desire of President Bola Tinubu.
Interest rate need to come down. Currently too high. Anti-people, anti-business.
However, achieving this seems a Herculean task over 100 days since the president spoke.
In economics, you cannot decree rates, interest rates. Interest rates is the price of money. And interest rates, is a very important monetary policy matter that used to manage your economy. So if you want to bring interest rate down, it will take a long time, of proper fiscal and monetary policy coordination.
Perhaps hope lies in the promise of a 125 billion naira intervention to MSMEs by the president. Economic growth is fundamentally driven by the operations of MSMEs. Consequently, energizing over 39 million businesses in that subsector is almost a short path to economic prosperity. President Tinubu knows this.
We shall remodel our economy.
He has said it. What remains to be done is the implementation.
I assure you.
Ini John Mekwa, Channels Television News. That's a look at the approach of President Bola Tinubu to easing access to capital and, of course, bringing about economic growth. And it seems that one way that the president thinks this can be done is by energizing, in his words, energizing the MSMEs. So we'll see how he does it. He assures us. So we hope to see that really soon. Well, let's still stay on this. Obviously, the economy is our business right here on Business Morning with Mr. Ayodiji Ebo. He's the managing director of Optimal by AfriInvest and joins us to talk about one of the issues mentioned there. Mr. Ebo, thank you so much for your time this morning.
Good morning, and thanks for having me.
So first of all, let's get your views, or at least one of your perspective on the issues raised in that report, which is empowering MSMEs. We've heard the president say he would prefer a single-digit interest rate, and one of the economists there said, well, it's not about pronouncement, it has to come over time. How real do you think a single-digit interest rate is in Nigeria?
Okay, thank you. I think it's almost impossible based on the current reality, because even for the banks, commercial banks, they are not a CSR organization. So by the time you factor in the cost of even doing business, and also you look at CRR factor, you look at some of the NDIC, the charges that they pay, when you look at that particular, the rates that will be charged, would always be higher than higher than single digits. I think what can be done to support beyond the reducing the finance cost is the cost of doing business. The SMEs provide their power. If we can provide stable power, that will reduce the cost. Infrastructure, the bottlenecks, transporting things takes a lot. If we can also reduce their cost, over time, that will filter into the cost of lending. Yeah, we know CBN has been providing support in the past years, but we've not been able to see or track it in terms of the efficiency or effectiveness of that. But if you channel, if what they have, if the proportion is still very low, so it's more of looking at what are those factors that we can take care of to reduce the burden on SMEs. Is it through taxes too? Because if you also reduce taxes, if you cannot achieve reduction in interest rate and you can reduce taxes, maybe giving a bit of tax holiday, that would also support their sustainability, because it's more about sustainability of those businesses so that they can continue to produce, they can continue to employ people and be profitable. And you can charge the tax, charge that tax on a bigger business in the future.
And then also the issue of debt servicing obviously was also mentioned there. But these days there's a term called debt overhang. What's that?
Yeah, so it's more the burden. So when you check the parameters, two major basic variables, we look at debt to actual revenue and debt to GDP. So you look at debt to actual revenue based on the estimates from the debt management office. I think about 2.1 trillion naira has been used to service debt, compared to about 3.2 budgeted. So when you compare that amount relative to the actual revenue, you would see that it's almost getting to about 70%. You look at it even now as a proportion of GDP, because of the securitization, it's almost at 40%, 40.5%, which is higher than the normal threshold. So it's important that when you look at those numbers, sustainability becomes a major concern. And the more we grow, looking at our debt numbers, which grew from 2022 from about 43 trillion to almost about 87 trillion because of the 27 trillion naira securitization as well as the exchange rate differential. So it shows that most of our actual revenue, what we work for, the amount of every naira we make that will be used for servicing debt will continue to increase, which will crowd out the productive sector, which is capital expenditure. There will be no funds for that, and that is what we all benefit. We spoke about SME earlier. This is what will create an enabling environment for the SMEs.
So our debt now is about 87.38 trillion naira for the second quarter of this year. And there's also another conversation of how this is affecting the value of naira. We see the naira dropping, at a very sad rate. Could you help us connect it and perhaps how we can get out of this hole?
Okay, so the way I would put it is that the devaluation of the naira is impacting on the value of our debt. So when you look at it as at Q1, the exchange rate at the official window was at 440. And as at Q2, when you're going to value our dollar debt, which is about 39% of the total debt, increased significantly. So on the quarter-on-quarter basis, increased by about 46% from last year. That's from December 2022 to Q2 2023. But you look at it in dollar terms, we increased by just about 9.8% to about $113 billion. So that element of the adjustment of the naira impacted on our naira debt. So I increased the value significantly.
So I guess that's also happened because I think 2 days ago we did see that headline in a lot of papers that the CBN has defaulted in paying commercial banks, and then of course it has to do with FX.
No, I don't think in terms of default on our naira debt, because we have control over the naira, it is almost unlikely that we will default. We can default on that. The worst case is to print money to pay or roll over. So I don't see any major concern regarding our ability to continue to service our debts. Like I mentioned earlier, yes, there may be concern around what is left for capital expenditure, but because these debts, we need to uphold that sustainability, debt sustainability, we have to continue to serve it. Where we would have concern, or we may want to have concern around, is the euro bonds. But when you also look at it, total euro bonds as at Q2 is around $15.6 billion. And when you look at the amount, you do the maturity analysis, it's sustainable. When you look at the interest we'll be paying on an annual basis, is less than, I think, maybe $1 to $2 billion. So, and we still earn dollars. So I don't see any major threat, any major concern in terms of servicing our debt. The major concern now is that we are not earning enough. And we still need to borrow. But now the borrowing must be more strategic around productive areas that will yield that positive return for us to be able to pay in the future.
So still talking about borrow, of course, we have to continue servicing even that which we have borrowed before now. And by now, I'm sure it's about 100% of our revenue being used for it. Is there any urgent thing or something and a different approach that this administration can do when it comes to the issue of servicing our debts and, you know, helping the economy?
Okay, thanks. I think what if we are able to at least first stabilize the economy, we can ask for maybe forgiveness. You look at the multilateral loans. I'm not talking about Euro bonds because that's commercial loans. You look at the multilateral loans and you see whether you can have a bit of restructuring. And when I say restructuring, if you increase the maturity and maybe get some you get some interest break for a certain period. And part of what I think we also need, you mentioned FX earlier, we still need to see how we can access multilateral to provide FX liquidity for us. We know what the backlog is, and we need that dollar to first clear backlogs to a large extent while we are providing confidence to attract foreign portfolio investors, foreign direct investors into the country before we begin to see a bit of stability.
Yeah, but it seems
our naira.
It seems that the bigger and long-lasting solution would be for Nigeria to improve its exports at the end of the day.
Right. Yeah, you're spot on. It's a long term. So you know when there's a problem, you look at how do you want to solve it in the immediate while you diversify your exports base from oil, which will not come overnight. I'll put it as medium to long term. So they are currently we export. You look at manufacturing and agri still account for less than 10% of our total exports. Can we support? These are where maybe CBN can support them with loan, restructure that sector so that we increase what we export and we earn more dollars. Also, it's important for us to also create liquidity. The spread, which we're all concerned about, has returned between the official window and the parallel market. So that will be a disincentive for importers to bring in their FX proceeds to the official window, as well as dollar remittances. So if we also don't solve that problem, then it will just be throwing money at the problem. Even if we raise $10 billion from the Eurobond market, as long as there's a spread, we will not be attracting that liquidity from the export proceeds as well as diaspora remittances into the official window.
All right, Mr. Ayodeji Abel, thank you so much for sharing your thoughts with us this morning, Managing Director of Optimus by AfriInvest.
Thanks for having me. Always my pleasure.
All right, we'll take a break now, and during that break, I'll show you how healthcare industry in Nigeria has taken another bold step with the unveiling of Gynoscope Specialist Hospital, which is in the Lekki area of Lagos State. The idea behind the facility, according to the Medical Director and Chief Executive Officer, Professor Jude Okowu, is to provide top-notch medical services to patients in a homely and comfortable atmosphere. He hopes that his efforts will impact medical tourism and stem the surge of immigration of medical professionals.
Welcome to the heart of Lekki, Lagos, where cutting-edge medical care is set to meet comforts.
As you can see, by the grace of God, to His glory and honor, we have been able to complete this project here today.
The opening of Gynoscope Specialist Hospital in Lekki provides a boost to the healthcare industry, judging by the state of the art medical equipment on the ground.
Initially, we were involved in just managing women, but now we are delving into management of neurological diseases, spine surgeries, cases of cardiovascular surgeries, knee replacement surgeries, and much more. So we are bringing the latest advancement in technology closer home to our people.
Here, the management says it believes that a great ambience plays a crucial role in the recovery of patients, a reason it pays a deliberate attention to design and setup, which has become a unique selling point for Gynoscope.
We've created an ambience where you don't feel like you are in a hospital. You feel like you are at home. It is known that there's a lot of psychology when it comes to getting well from an ailment. And I must add, people might look at this building and think it's probably only for the rich. No, it's not. Like I said, the whole idea is to create that atmosphere where you feel at home. I consider it significant at this critical moment because, as we are aware, a lot of people are leaving the country, the so-called Japa syndrome. People are leaving because they feel they cannot access the best and the latest medical technology in Nigeria, which is not true.
For keen watchers of the medical director, his work ethics will ensure best medical practices.
You just need to step inside and see the quality and the standards that they have here in this hospital. But again, for me, the most important thing is the man behind. It's Professor Okwe.
I'm happy here today because we've been able to open and to start running this project.
As Gynoscope opens its door to all, the management assures Nigerians home and abroad of exceptional service delivery.
Welcome back to Watching Business Morning here on Channels Television. Let's drill down on some commodities with Victoria Momo, senior analyst with Financial Derivatives Company. She joins us virtually from Victoria Island. So Victoria from Victoria Island, good to have you on the show this morning.
Good morning, Ine. Thank you for having me.
Great. We see oil pursuing $100 for a barrel, especially Brent. And last week we did hear some marketers complaining that this also means a higher cost of operation for them, and then even energy companies. And yet JP Morgan had warned since yesterday that Brent will even hit $150. How do these pictures come together? What does it mean, especially for Nigeria?
So thank you very much for your question. I'll start by saying that JP Morgan actually usually have a bullish outlook for oil prices generally, but so far we've seen a whole lot of factors play determining the oil price in the last 2 months, and one of which is the Russian and Saudi Arabia oil production pause, and then we've also seen Russia banning the export of diesel and petrol, and we also seen some mild recovery in China, which is the one of the largest importer of oil. So all of this is actually has affected the price of oil in the global market. And then again, we've there's also this transition to green energy, and that is a factor that is also contributing to the price of oil, and the interplay between OPEC and on-OPEC, the organization generally. And for Nigeria, we actually export crude oil, and oil trend or tending towards $100 per barrel actually means an increase in revenue earnings for us. But on the other hand, we also have the importation of this of refined oil into the country. So once the global price of this commodity actually increases, we see the cost of importation of refined crude actually increase in tandem. And like you said, the oil marketers are complaining that the prices of oil are generally rising. Here in Nigeria, we have the currency depreciation that is also affecting oil marketers, and that is coming in form of forex scarcity for them to access this refined crude into the country. And then there is rising global commodity prices and oil prices, which is also rising globally. And this means that we could see more cost of importation and cost of operation for the oil marketers here in Nigeria. But one thing that may interest you to note is that for a while now, we've not really seen that rise in global oil prices actually play down into the domestic price of petrol. And that is raising questions as to whether we still have, the issue of fuel subsidy by the government. The government already announced fuel subsidy removal. So the fact that, compared to diesel prices, we've seen oil prices still, stable between 614 to 700, and then diesel prices is going higher to, 1,000 naira per liter. So it's raising questions as to whether there is fuel subsidy in the country. And already there are news that the federal government actually spent about 169 billion naira on fuel subsidy. So this is, expected to it's just raising questions generally. And then we just expect that, this cost of importation will rise in Nigeria, given the global prices of oil rising, and this would also affect, the revenue of the government.
Revenue and expenses too, because that issue of subsidy is another latest one. And we spoke to Mr. Irwani, the CEO of your company, a couple of days ago, where he had initially indicated that it's most unlikely that subsidy has been removed. And just as you brought in now, because if Brent is getting close to $100, then we should also see it reflect, back home. We haven't seen that. That means there's something or someone who is at the middle and buffering that impact. But on the revenue side, this should be good for Nigeria.
Yes, that is true, because both oil and gas combined actually, contribute about 90% to the federal government's revenue, and we export crude oil. So, given that the global price of crude oil is actually increasing, it means that that is more revenue for us. But then again, there is actually one downside, and that is the fact that our oil production is still way beyond our capacity. It's still way below our capacity. You mean? Affecting, yes. So we have the capacity to produce about 2 million barrels per day, and our production is still at 1.2 million barrels per day. So that is, restricting the earnings that we could get from oil exports.
All right, so let's go to other commodities. Now we have cocoa. Cocoa futures lost 1.87%. And this also affects Nigeria and affects countries like Ghana.
Yes, of course, because Nigeria, Ghana, they are major players in the cocoa industry, and we've seen the price actually fall, and that is due to the fact that there are a series of factors that is affecting cocoa. And then again, but this is we're supposed to actually see, an increase in price of cocoa, because there is the black pod disease that is affecting cocoa production, and then there is unfavorable weather condition that is also affecting cocoa. So we believe that this fall in price of cocoa is actually just in the interim, and we could, see an increase in price of that commodity later on. And what this means is that we will see more earnings in Nigeria, because cocoa is one of our major agricultural export commodity. So once the prices are rising, we'll see more earnings into the country.
And then, in spite of Russia providing cheap grains, we see that wheat gained 0.59%. Well, we know the drought going on in Argentina. The weather hasn't been very friendly with the grains in recent times.
Well, you've already stated it. I mean, the drought, the weather condition, the El Nino, extreme weather conditions actually playing a role in global commodity prices and driving these prices, upward. But we still expect that these prices would come down in the near term due to the fact that some countries like the US actually has improved supply of this commodity, and it's expected that it would bring down the price of the commodity. And this is a good one for Nigeria, because we import significant amount of wheat into the country. So if prices of this commodity actually decline, it could reflect in the prices of wheat and other domestic commodities that wheat is being used to produce. And then this would also help us reduce the import bill from the import of wheat into the country.
All right, thank you for that. Then there's cotton. We hardly talk about it, but this time it's coming from Tanzania. The exports rose by 14%. What did they do? How did they increase their production so fast?
So basically, there are a lot of things that are being done. Everybody wants to, take advantage of rising prices of commodities generally, and then you see major countries actually doing domestic, policies in order to boost the production of these commodities to ensure that it is available to meet domestic needs and also to export. But in the case of Tanzania, they actually have a large market for commodity, and that is in the Asian region, in China and India. And then, of course, we know that China actually has, recovered from that period of deflation, and has also, the economy is also, recovering mildly. So that is supporting, the demand for commodities. And given the fact that Tanzania actually exports this commodity to China, I mean, the market is booming, and of course, this commodity is being exported to China, and then that is actually that has contributed to the increase in exports that it got from the cotton sales.
All right, what about domestic commodities? How's that looking?
So basically, domestic commodities are still, majority of them are still on the rise, and that is actually a form of deviation from the global pattern, and that is because the global food price index actually showed that commodities tapered in the month of August, but we are seeing a different scenario in Nigeria, and that is due to the fact that we are still heavily reliant on the importation of these commodities into the country. And then we also have the aspect of exchange rates problems. Our currency has weakened and even touched a low of 996 naira per dollar. So that is also affecting the cost of importation into the country, and that is reflecting, or that has had a knock-on effect on the domestic prices of the commodity. And then I'd also like you to know that there are also some commodities that have recorded some declines. For example, the pepper, the onions, and the likes, and that is because we've had the harvest season into play. We've had the seasonality effect into play, and this is making the commodities in abundance and also bringing down the prices of these commodities.
All right, Victoria Momo, thank you so much for sharing that perspective with us this morning, Senior Analyst with Financial Derivatives Company.
Thank you for having me.
Time to head to the markets now with Will Ibong.
Hi, Ini.
Hey, Will.
Good to have you this morning and talk to you, because yesterday you did say that the market might be bloody, but I said you should not let me carry that.
Well, maybe you have to report a negative market, and
yeah, it's sad that we're having to report a negative market. See that we're starting off a fresh week. I thought we come up, with that momentum, but investors are angry at somebody. Well, not somebody. Access Holdings. They expected so much from Access Holdings in terms of dividend payout, but what they gave was not what they were expecting. Maybe they thought Access Bank was going to dip into the FX, and then pay a lot more.
I guess the shareholders in banks like FBNH and all of that will be smiling. Zenith did very well also. I mean, we did see all of that, but I mean,
Access Holdings earnings were fantastic. They were great. It's just that the dividend, declaration was not what investors were hoping for.
Well, let's wait for a better time. Next time will be better.
So we did see that negative trend yesterday, bouncing off last week's negative performance, 0.66% down. The all-share index now down at 66,882 points. Equity cap, that's the market cap, at 36,000. It lost about 242 billion naira yesterday, and we saw that this was driven by profit-taking activities in MTN Nigeria. It was down about 1.7% yesterday. Dangote Sugar was also one of the culprits, and Access Holdings, we can't say it was down 9.9% yesterday. Investors did punish that stock. They did say that, and it happened. So we see month-to-date and year-to-date returns moderating to 0.5% and 30.5%, but in positive territory. Nothing to fear about that. Now, total volume yesterday, we see a decline in about 60% yesterday to 408.19 million units, valued at 5.44 billion naira, and all transacted in over 7,700 deals. Now, let's look at the sectors, see how they performed. Bit of mixed performance there yesterday. We see banking down 3.18%, and this is, Access Holdings had a lot to do with it. Also, some of the figures were also down. GTCO was down yesterday, and FBN Holdings was also down yesterday's trading transaction. Now trading down. Now see consumer goods also down yesterday. Dangote Sugar pulled down that counter. Industrial goods up, but Fad was in the green yesterday, so that really propped that counter up. Insurance also in the green. Oil and gas unchanged from its closing levels on Friday. Now let's see. Access Holdings, I did say, was the most traded stock yesterday by volume and also most traded stock by value. We saw 113 million units of Access Holdings sold off yesterday, worth 1.78 billion naira. Now let's talk to Ambrose Mordion, as the Chief Research Officer, Investigator Consulting Limited, to share what's going to happen next. Good morning, Ambrose. Good to have you on the program.
Thanks for having me.
Ambrose, we're seeing this downtrend. Well, the week starting off negative, but is rising yield or rates, already threatening the stock market? That in the midst of this end of the quarter, we're in the last quarter of the third quarter, and we're starting the next quarter. That's the last quarter of the year. Is this just the jitters from impending inflation rate hike, or just profit taking?
Yeah, actually, I would say that as you mentioned, the interest rate is also a major threat in any equity market, especially what we are seeing in the mature economy. Have given a signal or kind of that our market might likely to see another rate hike, even when the last MPC that was postponed. Any day they're going to reconvene, they are likely to adjust it, because we are seeing that the interest rate is already at 18.75. We are seeing an inflation hitting about 25.80, and in Nigeria, our exchange rate, despite is unofficial in the black market, almost 1,000 naira. It tells that something is wrong here in our economy, and that is why investors already start ditching, as you just said, just to position their portfolio and also take opportunity to take profit in the market. But I believe that the new management of the Apex Bank will come with a new dimension, because if they want to go the way of the body language of the president or this new government, I will tell you that they won't control inflation, they won't control interest and control exchange rate. They need to choose, because anywhere in the world, you don't control these three elements of a rate at once. You must choose the one to control and leave the rest for the economy or the market to determine. But I believe that we need to address our exchange rate more, because Nigeria, invariably is going into a dollar economy, which is very wrong. Anywhere Nigeria talk about dollarization, which is not our currency, we need to encourage that even our government should negotiate more this in naira than dollar, so that at the end of the day, we're able to have dollar and able to manage our activity. But for me, the market is really in a good dimension, despite we have seen a kind of a pullback. Look at the pullback, it's still from what we call a consolidation rate. That means the market is still in a consolidation rate. That means at this point, until you break down the level of 66,000 down, that is where you can start panicking. As far as market is above that, I will tell you that the position of market rebounding is side. Being the last week of the quarter, with your dressing to under already. And that today, we have seen this morning that market is changing. We saw the volume that market did yesterday compared to the previous week, and started decreasing. Yes, we saw that assets also was down yesterday, but this morning assets also started regaining. I feel that towards the end of this month, from Wednesday, Thursday, we have seen the market being increased because of what end of the quarter will be dressing. For me, there's no cause for alarm, which also have said at the beginning of the program. There's no cause for panicking.
Okay, Ambrose, we see right on the screen there, we see the London Exchange, Stock Exchange yesterday hosted our Minister of Finance and Coordinating Minister of Economy, Mr. Wale Edzo. Yesterday, we saw a host of other business and government officials in that stock exchange yesterday. So it's like Nigeria is leaving no stone unturned right now. How do you see this playing out for Nigeria's investors, especially now that we are on unclassified status in terms of our equity markets? Is this going to open up more doors for the equities, for foreign investors to come in, the road shows that are being organized?
Yeah, I'm happy that that the president last week, this week, that was in US, where he rang the bell also in NASDAQ. Also, we are seeing the Minister of Finance, the Coordinating Minister also in London. These are good steps, but I'll tell you that these steps are taken in the faith that yes, we attract foreign investors, which is good, because we need to address this our FS issue in Nigeria. But I think the first thing that President and the Minister of Finance should do is to put your house in order first. For me, nobody wants to come into an environment that is dirty. We are still dirty in Nigeria. Why? Because our FS market is not stable. We need to click on a level that we have stabilized this before we can start running to anywhere to advertise ourselves, to do ratio, because they are seeing what is happening in Nigeria. That means you are using your effort or resources. What you need to do is put your house in order first. Once you have made plan and showcase your plan, they will see it. They're not even going there to meet them. Once your plan is heading to somewhere, they will come on their own. We need to address our FS issue today because the gap between the official and the black market is very, very wide. We need to work to reduce it so that it will attract funds coming to Nigeria through food remittance and other. And also, we must look back to address the issue of oil theft in Nigeria. It's like the president and his team are joking with that area. We must go back to address that. That is a major source of what hard-earned currency in Nigeria. If we are not producing to our quota, no matter where you run to, you can't know. The people are looking at you. Let's make sure that we address what earns us dollar, what earns us of hard currency, so that at the end of the day, we are attracting more to come. But if what earns dollar is we are not making money from why we are attracting others to come. I believe that this is where the president and his team should focus, his security, personnel, all of them to focus that we must stop this oil theft we are seeing that affecting our production. Let's come up there and I will tell you, once we go to shop up our external reserve, I will tell you, naturally, foreign investors that comment. And also, there are two types of foreign investors. Those that are looking for foreign investors who might invest in infrastructure, who might invest in a company for 5 years, 6 years, is good. But for foreign investors, if you want to attract them, you have to be very careful too. Because when they are coming with the mindset that anything they are going out, that means we must make our economy stable, that Nigerians can play more. Because in the last 4 years, Nigerian investors, international investors have separated market for 4 years, an uptrend. Yet, if you are attracting foreign investors, make sure that you have to also give them room. Because I tell you, this foreign investor, the policy people, when they come to the market, it will start the flow. It's a good one, but let's attract them for work, direct investment. Here we can create employment for Nigerians. That also support the economy, now fund stability we are all yearning for.
Thank you so much, Mr. Ambrose. You did mention that Nigeria needs to clean up its house, and that's the work we are expecting from I'm sure a lot of Nigerians are expecting from the new central bank governor, Yemi Cardoso, who is set to be screened by the Senate today. We're hoping to see him put his, legs and hands to work to be able to get the country in order in terms of fiscal policies, other monetary policies that need to get,
yes,
to be coordinated together. Thank you so much, Mr. Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for sharing your insights on the program. So, we're seeing that we heard from Ambrose, we need to get our house in order. Nigeria is dirty. We try to get someone into a dirty house. It's like, you've not cleaned up the house and you try to get people to come in, it's going to be a bit...
Charity begins at home.
Yes, charity begins at home. Exactly. So let's get Nigeria in order so that people can come in and they'll not have issues or fears of FX repatriation.
Yeah,
anymore.
which is what we're facing now.
Right
the
now.
futures is about $6.8 billion. So
it is.
Let's deal with that first. Well, thank you so much. We'll see you at 1:30. Let's head over to London now, where Juliana is back to her base after running everywhere in New York and following this story. Juliana, it's good to have you back in London and to have you with our normal conversations right here in the studio right there. But we start not on a very pleasant note in Scotland. At least a strike is back, schools are closed.
You're absolutely right. Good morning, Innie. Thank you, as always, for your warm welcome. Massive disruption for families living in Scotland today because hundreds of schools, primary schools and secondary schools, have been shut, and they'll be shut for the next 3 days because of industrial action. Now, we have seen industrial action across certain parts of this country, particularly in England, from teachers from the National Union of Teachers over pay, work and conditions, which is the same 3 metrics that have been used over the past few months. But this one is slightly different. This is not involving teachers, but support staff and other staff members that work in schools. So this is catering, cleaning, pupil support, administration and janitorial services, although they're having similar issues to what teachers are saying. Basically, they're not paid enough. Now, there were 3 major unions in Scotland that were negotiating with the Scottish government, in particular the First Minister, Humza Yousaf, and 2 of the main unions have actually accepted the pay deal offer, which I believe is on the tune of about £580 million. But one of the biggest ones, Unite, they have asked their members not to accept this pay deal, which means there are going to be strikes over the next 3 days, Tuesday, Wednesday, Thursday. Of course, we talk about these strikes as if it's just a headline, but of course, anybody that's a parent, it's not going to be easy. The school term has just started a couple of weeks ago, and to try and scramble to get some sort of daycare over the next 3 days is not going to be easy. We have heard from the First Minister of Scotland, Yousaf. He's asked the industrial action to stop immediately, and they've asked the union bosses to get round the table, but unfortunately, a deal won't be closed this week.
Yeah, well, unfortunately, even back here in Nigeria, the issue of subsidy and, other issues is still, strike is hanging over our head. So, I mean, unions are talking and trying to protect the welfare of their members and the citizens generally. Right. But this seems like a bit of good news. I don't know, help me to understand. Customers will receive £114 million off their water bills next year. What was this about?
Yeah, that's absolutely right. This is because Ofwat, which is the water supplier regulator, they have issued a series of, I suppose we could classify them as fines, to some of the big water suppliers in the UK, Thames Water being the biggest. I believe they've got about 14 million customers across London and the southeast of this country. And basically it's because in 2019 the regulator set out a series of measures which they test the big water companies against. Some of them are about leakages and sewages and pollution, and anybody that lives across the UK knows that water supply over the past few years. Thames Water, it was only a couple of months ago, they had to get a bailout from the government. So every year, the regulator looks at the performance of these water suppliers, and if they're not, keeping up to scratch, then they have to reward their customers. So it's come up to about £114 million. Thames Water, the biggest culprit here, they're having to pay out about £101 million. Unfortunately, this is not a one-off payment, so we won't be getting a big check in our bank account, but at least at a time where bills are soaring, we will start seeing a couple of pounds or pennies off our bill, and every little does help, of course.
Yes, it does, and it also puts the companies on their toes to ensure they give good service at the end of the day. Great one right there. Great one, Juliana. Thank you so much. We'll talk to you at 1:30. Talk to you then. All right, let's head to the crypto space now, and thank God Ladi is here. So
yeah, and talking about who's on their toes at this point, who's on their toes? Investors are on their toes.
Oh, they have to be. Yesterday, the market was neutral.
Yep, and back to fear. That's what we have now.
Okay. Did you hear that good news there? I mean, it's something that one would wish we could have in Nigeria, where any company that does not perform optimally will have to pay back, to customers. That would put them on their toes.
It only makes sense, and that way they give you better service and better products.
Exactly.
Consumers need to be protected at all costs at this point.
Yeah, we have FCCPC, but I guess we haven't gotten to that level yet. We have to climb the ladders one step after the other.
Very soon, we'll get there. All right, let's look at the market now. Let's look at the sentiment right now. We see the sentiment is still fear right now, about 46 points. We see the red fear showing that traders are quite afraid right now in the market. Let's look at the top cryptocurrencies we track. We see Bitcoin there. Nice move up this morning, $26,271 at about 8 a.m. this morning. Ethereum, 0.61% up, $1,500. Cardano holding up about 24 cents, and XRP losing that 52-cent level now back to 50 cents, up 1.17%. So Bitcoin, altcoins not looking so bad this morning. Let's look at the top gainers now. We see GMX topping the counter, 4.34%. Decentralized PEPS, Perpetual Exchange there, $35.15, topping the counter. Yeah, with that news about MicroStrategy actually buying a lot of Bitcoins yesterday. Let's bring in Mary Imasua now, financial market analyst. Hello, Mary. Good morning.
Hi, good morning, Lottie.
Good morning. Great to have you, Mary. So we got that news yesterday. MicroStrategy, Michael Saylor, they're back in the news again. This time he bought about 5,000 Bitcoins. Yeah, a lot of money. What is he seeing? Why is he buying so much Bitcoin at this time?
Well, I mean, as it is, like, everyone tries to take advantage of the dip. So he, being a really good Bitcoiner, he's, taking advantage of the dip. But it just shows that irrespective of the price of Bitcoin, like, this is a great opportunity to buy Bitcoin, and which is he's already doing. Even El Salvador bought recently, and he spent a lot of money on this. This is $147 million, and it just shows that he has great faith in the market. There is a Bitcoin halving coming up really soon. So the fact that people are kind of skeptical or scared about the price of Bitcoin since the price of Bitcoin went down a little bit. He's just showing that he is extremely bullish. In fact, like with the ETFs, also the Bitcoin ETFs coming up, like there was something he said recently where he was talking about how it's so much, like it's even more beneficial to like invest in MicroStrategy than to buy a Bitcoin ETF. You know how it is with stocks. When you buy a stock, like which is MicroStrategy, when you buy that stock, it's like you're getting returns when the value of the MicroStrategy stock does better, but you don't get something like that with the Bitcoin ETFs. But of course, you can't replace buying a stock that supports Bitcoin with buying Bitcoin itself, which is what MicroStrategy did.
Yeah, I guess investors do decide which one they want. Are you buying Bitcoin or a stock that supports Bitcoin? But still about Bitcoin, now we see data from Sentiment shows that BTC-related discussions on social media have dropped recently. Is that a sign of things to come?
Well, you know, a lot of people, like especially those who are just into Bitcoin for the sake of speculation, they of course get, you know, affected by the price action. So it is understandable that it is quite low. But in the background, there's a lot of building going on in Bitcoin. So it's only people who are really into the space that get to see this. Sadly, not many people are seeing what's being built in Bitcoin, but I'm sure that that's going to change over time once the price of Bitcoin picks up. Right, definitely. We know how social media likes to shout when price volatility is high with Bitcoin. Thank you so much, Mary Maswa, financial market analyst. Thank you. You're welcome. All right. Thank you, too. Yeah, so, Annie, that's how the market is looking. We're seeing social media sentiment with Bitcoin. It's dropped to an all-time low this time. What does it mean?
Well, I mean, it's
Nobody's
an opportunity for some people, as you're discussing with Mary right there. Some people are accumulating, so... Yeah. Or maybe it's a sign of capitulation at this point. Maybe everybody's tired at this point, seeing the prices go down. So you're not talking about it on social media that much. Money, laddie. Nobody can get tired. Exactly. All right. Thank you so much, laddie, for all of that. Well, thank you so much for being a part of Business Morning. I hope the 55 minutes of current and relevant business conversation was worth your time. We will add more value tomorrow, so all you have to do is tune 10 a.m. tomorrow. We'll be back. But 1:30, Will Ibong will be back with Business Incorporated. I should give you an update from the world of business. I'm Ini John Mekwa. Do remember to make some money. It's very important.